As highlighted before, welcome again to this video. As highlighted before, wanted to see a reaction higher towards this 4 hour fair value, not fair value gap high, and that has already happened. And now I will be shifting uh, my draw to this high. I want to see higher prices, but always whenever I am identifying a new direction, then I also must formulate another what we call the context area. So in this scenario, the market had formed a bullish engulfing candle, and I will be talking of the missed opportunity that I had, whereby the price didn't really give me all the confluences or a sting into my context area, of which I was expecting higher. So this candle closed above. Then what I was expecting is maybe a sting into this area to create the immediate rebalance, then expand higher. But what the market did, opened and expanded higher. And from this scenario, I want to look onto ways on how we could possibly avoid scenarios like this. Maybe how we can read better, instead maybe anticipating always for this scenario immediate rebalance will happen, which didn't really happen. But what has actually will be confirmed in the next 29 minutes is a fair value gap. So from that, after identified the context area, I dropped onto the 1 hour time frame to see what was there that could cause the market maybe to go lower, then expand higher. So this was the 9 a.m. candle which I wanted to trade, or which I usually trade. So then the 8 a.m. candle, what it did, it closed higher, did close higher, which wasn't really an ideal thing to me. And at the 4 hour immediate rebalance, what we have is this fair value gap. So to me, wanted to see this candle maybe open, rally lower, sting into this fair value gap, then push higher, but that wasn't really the case. And how could I have really read it better is dropping lower to the 30 minutes and try to see the structure that is happening there, how maybe breaker blocks are being reacted to. Remember, we had the target which has been finally met at this time, and before then, what we can see is the market had cleared all these lows, and the market had swept these lows, expanded higher. We had fair value gaps that were being formed, tapped into. We have them small fair value gaps, right? We had a small fair value gap, had us thing into it, price consolidated there for a while, then we had that expansion above this high. So I guess the appropriate time to have entered this trade is when maybe a price had closed above this previous swing point, and also this swing point. Immediately the 8:30 candle opened. That would have been the ideal position to be taking a trade, because price had already closed above this breaker block, and since we have the target and I'm bullish, then something like this was the breaker block and the last up close candle before the push to sweep all these liquidities. So this would have been ideal, because the 8:30 candle had closed above all these liquidities, and we have this target. So around that time, that's where I should have looked for a trade position, and the ideal trade position would be immediately this candle closes above this swing point. I would have taken a position there, but the main challenge would have been where would be my stop loss. So in this scenario, I'll utilize the breaker blocks that are being formed within these larger breaker block. So we had price create that high, a drop off, we pushed again with this candle closing above. So the last up close candle within this range, that's where I would have maybe had my stop loss, ideally at that point targeting a 1 to 2, and that will be a quick trade. But ideally, what I wanted to see, I was really fixed to seeing price dropping to this level, which didn't happen, and price kept on pushing towards that direction, and that was actually made. Didn't take any loser for this position. It just rallied without me, didn't try to rush in at this point. At this point, I was watching also whether I could take a position going higher, so I dropped onto the lower time frames. But to me, I don't like rushing into maybe when I'm late, or maybe when I've missed the ideal entry. I don't usually like to chase that. It's better to go and look for another pair that I can trade. And at that time, I rallied to NAS 100, and at this level I identified that the market has been bullish, and from the daily time frame we saw, as of yesterday, the market dropped. And long term wise, if we go back to the monthly time frame, I want to see price deliver from this internal range liquidity to an external range liquidity. So I'm bullish for this NAS 100 that has been confirmed by the weekly time frame. We had seen that displacement last week and this other previous week, but as this candle opened this week, we saw a drop lower, which was impacted by the AI news that came out about the Chinese AI company and DeepSeek. I don't know whether you've heard of it. And the market really dropped deep and swept the previous week's low, as we can see over here. And now seemingly we are rejecting higher, and same, the wicks do the damage and the bodies tell the story. So currently, as this body is going on retracing, and it adds confluences, or we should drop maybe to the 4 or lower time frames and try to look for confluences that price should be pushing higher. As well as currently what we're seeing is this up close candle is currently being respected, but we cannot confirm that because this candle is yet to be closing. We have that previous week's high that should be my first target, then later on that monthly high. And the daily time frame, we've seen the fair value gaps that were yet to be traded into, market dropped lower, back into that monthly fair value gap, and now we are rejecting, going higher. So we need confirmations. And if the market is going higher, what can we target from the daily? Maybe this immediate rebalance, but remember we have the PMH there, previous month low, and also what we have is that previous month high. So from the 4-hour time frame, what I'd seen at that time is we have this fair value gap that was traded into. The market didn't, all this fair value gap didn't do its job, because if we are bearish, this fair value gap could have done its job and pushed prices lower towards this low. But what we saw is price consolidated, pushing higher, forming a bullish structure, whereby we have bullish expansive candles that are huge compared to the bearish candles. So with this candle confirming a close above this bearish candle, to me that was a change in set of delivery. And we have this high that had wasn't really taken out. Remember, I usually trade the 9 a.m. candle, this current candle, which has 21 minutes before it closes. So what I'd seen during this time is we had a change in set of delivery being confirmed. This fair value gap had failed. We are forming a bullish structure. We have a fair value gap at around this point, and also we have relative high, equal highs resting above this level, which to me is a strong point. If we have a fair value gap also confirmed at this area, then I can enter for a swing trade targeting this high as well as this PMH. Until a fair value gap is formed, I will be in this single trade only, which you can see I did enter at this point. And the logic behind my entry, you can see we have this bullish structure. Before the New York time, the market dropped lower at around 10, we pushed higher, and we had this candle displacing above this consecutive down close candle, signaling to me we have that change in state of delivery from bearish to bullish. And therefore we had a fair value area over here, the 1 hour fair value area. What I saw, price, what we can see currently is price are staying into that. We have created a fair value gap, but is this fair value gap likely to be traded back into? We'll identify that. But what price utilized is this fair value area, staying into it, then we pushed higher. From the 30 minutes, a level where I took my entry was this 30 minutes fair value gap. So this candle dropped to sting into that fair value gap, also create that 1 hour reaction of that 1 hour fair value area, which did happen. Then price displaced higher, and currently what I have is my stops are below this breaker block, because we have a low, high, lower low to sweep all these liquidities, and a high that broke above this high. So we have that sting, and because these are breaker block, now I'll slightly have my fair value, my stop losses below there, and then have my target at a 1 to 3. And if I see prices displacing nicely, then I might be tempted to have these as a swing trade, hold towards the previous month's high. But for now, I just want to see if my 1 to 3, I think 1 to 3 will be met, and see what will be happening. And at this point, remember, our price has already tapped into that key level, which is the 4 hour fair value gap, and that's why I had to trail my stop loss towards this point, because we might also reverse off that and then continue lower. So at least my risk will be managed properly, and if the market rallies higher, well and good. So that's how I did read price, and currently nicely displacing above these highs, and a trade can be even, the SL can be even moved to break even if the market rallies lower, then you'll be safe. So that is it for this today. Looking forward to journal down everything, and also write what happened on gold, and how next time we can avoid that and take opportunities of nice movements like this. So that is it for today. Looking forward to hear from you tomorrow. Bye bye.